I promised you a conversation that either you're going to say sour or you'll be like, apana. And the person to help me have that conversation with you is Linda Kanyari. She's the tax expert, policy and tax advisory at KRA. There is a word we learnt in late 2020, along with COVID-19 and vaccine, called minimum tax.
Yes.
We heard it and everybody was like, oh, Riswa.
What's a timing?
What is what?
COVID? And you want us to pay tax?
A minimum on
tax?
top of, please tell me, what is minimum tax? Please define it.
In a nutshell, it's what I'd call the bare minimum that a taxpayer needs to part with in terms of taxes. What I mean is, it's defined as 1%.
I'm taking notes.
1% of your turnover. And it's due, would say quarterly, but I'll put that in brackets, but we'll demonstrate why it's quarterly. So what that means is, Carol, you're not allowed to deduct your expenses. We're looking at gross turnover. Yes, what you made in January, what you made in February in terms of the sales.
Now I understand why the Riswa came out. Wait a minute. I own a clothes shop.
Yes.
We sell baby shoes, socks, prams, da-da. You want that minimum tax, which is how much, by the way?
1%.
1%. And you want that 1% on?
Your turnover.
My total sales?
Yes, on your total sales.
And I can't deduct?
No, you cannot. Why it was introduced, I know, at such a time when we were grappling with COVID, it was found, let me use those words, that the businesses that have been running over the years, and we've had people in perpetual loss position. So you're running...
those people. Look what you've got and done now.
We look at the exclusions, of course, but generally you'd find that they're making very huge turnovers, but bottom line, they're constantly on loss. And you know, with income tax...
I know how they do that. They expense everything.
Yes,
okay.
You expense everything.
Okay, this video is over. I'd come to bat for you guys. I had.
It's rather contentious, I'd agree, because it depends also on the industry that you are in.
Okay.
Because you find in other industries the turnover is quite high, but the margins they make
are very small.
This
is also true.
And guys who, especially who are in the oil industry, oil and petroleum industry, and just before the end of last year, we saw 2 inclusions into the incomes that will not be subject to this minimum tax. Okay. Let me explain. When it was first introduced in June, if you're earning employment income, then you will not be subject to minimum tax. If you're earning income that is subject to turnover tax, items like capital gains, when you sell your piece of land or whatever item that you sell and you make a gain on it, then you would not be subject to, to minimum tax.
Okay.
So those were the basic exclusions that were there.
Okay.
Then the sector such as the oil and petroleum industry lobbied through parliament, because these are the guys with the high turnovers but very low margins. And here we were saying, we take 1% of your turnover. Yet again, the government also controls the prices of these items.
This is also, they have a valid argument.
Valid, very valid. And they wrote through the Petroleum Institute, and that's the PIA, and a ruling was given, and that was actually done today or yesterday, where the oil and marketing companies have been exempted from minimum tax. Exempted.
But I can understand.
Yes. Yes, they made a case.
They made a case.
Yes, they made a case for themselves, which was considered, went through the right channels, and found its way into the exclusions. And also persons who are involved in insurance business. There's still a discussion that's ongoing, because do we say the brokers, agents, the underwriters, is it everyone who is being excluded? And so what we have advised these guys in this industry is to write to KRA so that they get the interpretation of that kind of provision, rather than exempting yourself and saying, I'm exempting myself based on this particular...
No, you can't.
You can't. Exactly, you can't.
Right. Okay.
Yeah, you can't. So basically those are the exclusions. What I've just gone through.
It has never been a busier time for tax consultants.
Yes, they're actually
finally working.
And this kind of makes them more relevant, because it's not about now the cyber person. They've always complained that taxpayers are running too unqualified
who did KCPA.
You know. But now you need someone who reads and
understands and interprets the law.
Correct.
Yes. No, this I get.
Yes. And so for minimum tax, other than those who are excluded, one thing you also need to do is, when do you pay this tax?
You said quarterly, and then you said you
Nitafafanua.
Please tell us.
Nitafafanua, because minimum tax goes hand in hand with installment taxes. Let me break it down. Previously, companies would pay installment taxes on the 4th, the 6th, the 9th, the 12th month, based on the taxes for the previous year. So you project. If I paid 100,000 last year, project that by 110%, spread that over over the 4th, 6th. So we are saying at the point when installment tax is due, compute your minimum tax as well.
Your 1%.
Your 1%.
Got you.
Of the actual turnover for that period that has elapsed.
Which stops our friends of nil.
Yes.
Okay.
Our friends of nil, our friends of cutting forward losses. So you pay what is higher.
Actually, I hear you, and I don't know whether this is an argument that has been made, that you can't have been in business for 5 years, 6 years.
10 years, Carol.
So why are you still in that business?
You know, why are you still in the business?
I came to this conversation ready, but I also hear.
We are winning souls here.
You did not go there. Okay, so for me, I needed you to... And I love the way you've landed it, because I was like, chick.
Why? Yeah.
And I can't have this platform and not discuss minimum tax, because I could tell everything, it has the same sort of vibe as every time people say data bundles. Nobody wants to hear anything. So I was like, I've got to go there.
Yes.
But
we have to have this conversation.
The question is, do you get it? Do you agree? If you don't, comment. By the way, you can tag them on Twitter, because I don't have answers and I don't work with KRA. But I'm happy for her to come back and answer your questions.
I would be glad to.
Yeah?
Yes.
Wow. you notice you took the wind out of my sails. I was ready.
I know, you're all fired up.
I was fired up, and I'm like, kind of makes sense. It's just that it's, and actually that was my war. It's on turnover.
It's on turnover. You know, but at the end of the year, when you are preparing your books, then you will be allowed to claim this credit. Just the same way you claim credit on installment taxes, on DST that you've paid, on advanced taxes that you've paid.
Yes.
When you work out your math at the end of the year,
and you take out your expenses,
yes, but we are saying minimum tax is the bare minimum that you'll part with. So deduct all those advance payments that you have made, as long as what remains paid to KRA as bare minimum was 1% of your turnover. Yes.
I'm open to questions, which I shall pass on.
We shall be glad to answer.
That was brilliant, by the way.
Thank you.
No, that was really good. Yeah, so I'm just waiting for some tax consultant who's watching this saying, Caroline, I work for, I would like to take up the issue of, and I will.
Yes.
And I will send it to you.
Yes.
And you tell us, we have the right for rebuttal. However, I need to tell you guys 2 lines I have learned from KRA. One is called, it is clear, it is the law. And on that note, I want to thank you.
Thank you as well.
And I will give this particular conversation 10 days and I will look for you again.
That is fine, Carol. We are glad to demystify. We are glad to take in the comments from, from the viewers and from the Kenyans.
Yes.
And just to make things better and more clear for them to understand and to comply.